The Trade is brought to you by Vantage Markets, delivering one of Australia's most trusted and award-winning trading experiences. Explore smart trading at vantagemarkets.com.au.
Welcome to The Trade. Well, let's first take a look at what traders are watching out there. Russia and Ukraine are due to talk about peace, but are still far apart. Russian and Ukrainian officials due to sit down in the Turkish city of Istanbul for their second round of direct peace talks. But the two sides are miles apart still as fighting continues. The Gaza ministry saying Israel has more than 30 aid seekers. Israel denies that. More than 30 Palestinians were killed and nearly 170 injured on Sunday in South Gaza near a food distribution site, according to the health ministry, as witnesses reported Israeli soldiers firing on people collecting aid. Israel has said denying that. And a Polish Eurosceptic is expected to win the presidential vote. Nationalist Eurosceptic Karol Nawacki was expected to win based on all votes counted, with the results that would deal a blow to the reform agenda of the pro-European government. Let's now take a look at the charts. Gary Glover joining us from Novus Capital. Gary, great you can join us on this Monday. Now, of course, we're beginning of a new month of June, and we're often hearing that refrain, certainly this time last month, about selling may go away. Well, you might have missed out if you'd done that.
No, that's exactly right. I mean, I think the stats are, maybe the last 4 of the last 5, or maybe 9 of the last 10 Mays have been up. So that sort of sell in May is kind of, it's been a while since that's worked.
All right, so let's take a look at what we've seen then on the local market.
Yeah, well, we've seen a pretty explosive move out of that low. I guess if we go back and look historically there, when the XJO and even the US market has a bounce this strong, we don't normally give it up straight away or sort of quickly. The last couple there, if we look at that October 22 low there, we had a little pullback before it went higher, but normally you're more likely to sort of grind it out higher there, sort of similar to what happened in October 23. So, again, we came out of the gates in October 23, had a really strong move, and then had that slow grind higher here. So look, I think the easy money has been made. Might be a little harder to make it here in the next month or two, but more than likely here we're probably going to grind slightly higher here, just at a, just on a, I guess, on an upward trajectory there, but probably just a little harder to come by here. So you might get a little bit of choppiness there, but I think we're going to grind higher. And I think post-election is normally the sweet spot, sort of April through to August. So that looks on track this year.
All right, when we take a look at what we're seeing on Wall Street then, what are you seeing with the S&P 500? Is it a similar trend or not?
Yeah, similar trend. I mean, look, the whole thing, each of those big pullbacks here historically have just kind of sat on top of the previous high. So we can kind of go back a lot further here, but just to sort of give it context there, you can sort of see that pullback, just pull back to the high back there in early 22. And that leaves it in a strong position there. Each time it's sort of done that, it's actually gone to a new high. So again, similar to the Aussie market, more than likely we're sort of going to grind higher here. And I guess the ideal sort of setup would be to sort of go up into that sort of seasonal high around early August, have a little dip into, September, October is normally a seasonally weak period, and then sort of tend to finish the year on the Christmas rally. So the ideal setup might be for, something what people refer to the cup and handle sort of setup here. So might grind our way up to the high, have a little bit of a handle there, and then maybe by the end of the year we're at new highs there. So that would be the ideal setup for the rest of the year.
All right, Gary, let's get stock specific then, locally at least. The first one we'll take a look at is John's Lyng Group. And if you've been a shareholder there, you have copped it, haven't you, particularly over the last 12 months?
Yeah, it's been lucky. I mean, I've sort of probably come in a bit recently here, so that's been working quite nicely. But yeah, look, it's an interesting company really, because you've got here, I think the market cap's about 750 now, but it was about 650 there when I first started buying this stock here. And company's got a revenue line there about $1.15 billion a year. So you're not even trading at 1 times revenue there, which is most companies on the ASX will be trading at least 1 times, if not a lot more. So there's definitely some value here in John Lyng. Not a stack of debt, maybe a few concerns about the heading into US and growth there, but still, you got to think here with storms throughout sort of Queensland and Sydney here, and in the last 3 to 6 months, there should be a ton of work on here for John Lyng. So I like the price action coming out of a bit of a descending wedge, starting to see volume start to improve there. Just price looking a little bit firmer here. So definitely one that I think fundamentally looks cheap, and technically just starting to see some green shoots starting to come through. So
All right.
do like this one here.
Now, an almost inverse of that chart is the next one we're going to take a look at, which is A2 Milk.
Yeah, and I've been very strong here, A2 Milk. So, while the rest of the market sort of found a kind of low in April, I can see here that A2 Milk has been pretty firm there. It's a much higher low in April, and it even sort of over the last 3 or 4 weeks there, we're still holding pretty tight there. So struggling to go down here at the moment, which is sort of just kind of reminds me of that, sort of around the October, November there in 22, it sort of had that pop and then congested, and then eventually it broke out and went high. So I think this is one to be watching closely here. I think if we start to break a few swing highs here, that could go for a run here. So I know some people, bit guarded with this one here. Obviously, we've seen a lot of growth stocks do pretty well here, but just like the price action there is pretty encouraging.
Let's move on then to Super Retail Group. What are you seeing with this one, Gary?
Yeah, look, a lot of guys sort of saying that with discretionary spend here, interest rates cut there should be sort of good for some of the retailers there. So we've seen a bit of a pop out of the low for Super Retail. And look, we've come back to retest a bit of a key low back in early 24. Bit of a marginal new low, a false break. So sometimes you can get a fast move out of there. I just like the way that we've kind of rallied pretty impulsively. In the last 2 or 3 weeks, they were sort of going sideways on lighter volume. So again, struggling to go down here. So do like this one here. I think it looks technically pretty sound. We can see a clear trading range there between that $12.50 and $17. So I think we might be able to rally back up to the top of that kind of recent range.
All right, the next one is IPH. Now, once again, over the past 3 years, it's very much in a downward trend, but have we seen something of a reversal just in the past month or two?
Yeah, seen some encouraging signs. Got a bit of a basing pattern there. Got a series of higher lows. What really stands out here is the volume has probably doubled in the last sort of 6 months there. So we're seeing possible signs of accumulation taking place there. So that IP area there is sort of so it's it doesn't look expensive there on a multiple. It's got a pretty high yield at the moment here. So look, it is a long-serving downtrend. That's the negative there, but just starting to show signs of a positivity there. So I think if we see a bit of a pullback there and we don't see too much selling and it holds tight there, I think it's looking kind of constructive there. Just the early signs of a basing pattern starting to form there.
And would the same apply to your final stock, your Ramsay Healthcare? What are you seeing?
Yeah, 100%, Andrew. It's it's had a pretty tough few years. They've been trending down for a long time. So what we have seen here recently is break, I guess, a bullish break out of that downward channel, which is a positive. But we really want to start to see a few higher highs being made. So we still haven't taken out a previous swing high yet. So I think around 39.51 might be the last high. But sometimes initially you'll break the downtrend, then you'll get a bit of a basing pattern there, sort of start to build a few high lows. So again, some green shoots there for Ramsay. Not still possibly could be a lot longer to go here yet, but ideally if we start to see some new higher highs and a few higher lows, it could be sort of positive for it. But look, bit early, but just some potential sort of more positive signs there for Ramsay.
Gary, Thanks for getting us across the technicals. Thanks for joining us at Novus Capital.
Thanks, Andrew.
And that is the trade.
The Trade was brought to you by Vantage Markets, delivering one of Australia's most trusted and award-winning trading experiences. Explore smart trading at vantagemarkets.com.au.